but I do believe the market is going to finish up stronger, probably 6,600 at the end of the year. And I do going into next year. Again, I'm very, very bullish. When you see the Russell do as well as it has done just since April, that's really good indication of what's to come, because that's the lifeblood of America, small business. So going into next year, actually we're seeing the S&P be over 7,500. So we're very, very bullish on the markets and the economy.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we're back with Edward Siddell. And you find Eddie, of course, at egsifinancial.com. Eddie, it's great to have you back on. So we got some numbers. We got GDP numbers, tariffs, trade. What's going on here?
Well, thanks for having me back. You know what? A lot of news, and it's all heading in the right direction. There's really nothing that has been unexpected except for one very important thing, which is Powell's speech in Jackson Hole. Indicating and floating out that trial balloon that they're going to lower rates. We believe that he probably should have done it sooner. But I think there's so much economic pressure, not from the outside, but I think they finally really started looking at the numbers as well as the governors of the Fed. And you started to see that with a lot of Fed governors going against Powell and voting against. And so, I think they're going to lower rates. So it was his speech that was a little bit shocking. I thought it was going to be the other way. But with GDP numbers coming in, that was not shocking. We were expecting that because of the trade imbalance and the reduction of the trade deficit because of the tariffs. The PPI numbers, honestly, I don't want to say that they're worthless, but you really can't depend on them because even since the Biden administration, they've been inaccurate. They've been updating and redoing those numbers, month over month, revising those downwards. And, we're seeing that even now. So, really just looking at the real data, economic data, we're headed in the right direction. So I'm very, very bullish on the economy and the markets.
Really think so, huh? But what about those tariffs that were going to throw the world into a global depression, Smoot-Hawley, and, remember the Maine and all that good stuff, right?
Yeah, you know what? The world did not come to an end for sure. And, you and I, we actually talked about this earlier in the year. And it was really, we talked about, tariffs, as, taxes versus tactics. And really, it's that reciprocity. It's nice to finally have a leader of America that can negotiate on behalf of its citizens, its populace, to our benefit instead of to our detriment. So this is exciting stuff going forward. Not to mention, the CBO, you know how they are. They're very hawkish on estimates, especially as it relates to revenues coming in. And for them to say they're expecting over $3 trillion in revenues over the next 10 years, these are very, very exciting times, not to mention, all the private investment coming into the U.S. as a result of these negotiations going forward. So companies are on board. Again, we're already starting to see the trade imbalance as reflected in the GDP numbers that came out today. So we're in the right direction.
All right. So we're in the right direction. The tariffs didn't cause the world to end. We're still working out some things with China, though, but it looks like the rest of the world's kind of falling into line, aren't they?
Absolutely. And to your point, so you brought up China, and, again, negotiations and tactics. So Trump yesterday, what did he say? So he announced, he would allow 600,000 visas for Chinese students to come into the U.S. I know there was a lot of backlash on it, but the first thing that came to my mind is he's negotiating. He's trying to get China to come to the table, and he can he can, just as quickly as he said that, he can change his mind and cut those visas off. So he is trying to get China back to the table and get really what we want. So, and I'm sure there's going to be a meeting in the mind somewhere in between, right? That's when it's a good negotiation, when no one gets what they want.
Like China without intellectual property theft is like a war with cannons, right?
Yeah, absolutely. Absolutely.
Can they really, that's their business model. They really going to change their business model just because Trump says no mas?
Yeah, exactly. Exactly. And they're playing the long game. When they know that they only have to wait, the reality is 3.5 more years, and then we have a new administration coming in. So they're biding their time. And if we can get something in place between now and then, we can boost production on our side and within our borders of prescription meds and other things, and really become more of a manufacturing society than we are right now, instead of just 100% consumption. That's going to benefit us. And then again, China, it's really going to give them pause and be willing to negotiate going further after this administration is done.
Yeah, well, we will see. I guess the proof of the pudding is in the tasting here. So you're seeing rate cuts. How much do you think rates are coming down?
I was listening today. You heard some of the commentators, pundits, talk about a big rate cut of 50 basis points. I don't see that. We've seen maybe a total of 50 basis points this year, once in September and maybe once again in November, December, and that's it. We do believe going forward, over the next 12 months, we'll see, 1% or maybe 1.25%, but that's about it.
Okay. Well, hey, every little bit helps, right? What about housing? What's your take on housing?
Well, when we're looking at the debt as it relates to interest rates, right, in housing debt and making it more affordable, really what it's going to do is it's going to free some of the housing up, because you have some of our clients, they want to downsize, but it does not make sense for them to downsize and pay the same amount that they're paying now for a smaller house. Because right now they're paying, maybe 2.25% or 2.5% and go as high as 6.5%. So as rates come down, it's going to allow them to downsize and free up some of these other homes for first and second time home buyers, all the way across the board. So again, I think the housing problem is bigger than just interest rates, but that's a really good start.
All right. So, I don't think interest rates are enough to solve it, because, a lot of it was caused by lower interest rates. People with 3.5% mortgages, they don't want to move because they're going to get a 6.5% mortgage.
Right.
And that's a lot of money. So even if you want to downsize, you can't really afford to downsize unless you buy your place for cash somehow, right?
Yeah, you're absolutely right. I mean, it's fiscally irresponsible to, get a house half your size and pay the same amount or more.
Yeah. So we got a lot of work to do there. And I haven't looked at the housing ETF, home builder ETF, and the home builder share prices. What have they been doing lately?
You know what? Honestly, I haven't either. I do know that housing sales have gone up just a little bit throughout the summer. We did have a down month in July. But, overall, as far as that ETF goes, honestly, I have not been tracking it.
Okay. Well, we got to start tracking it again, because I have a feeling it's going to get important very quickly. Hey, yes. Any parting comments here? What you think the economy is going to be doing, and will we see a pickup in the fourth quarter?
Yeah, I think we're going to see a little pullback between now and October. There's going to be some profit taking, which is justified. And I like that. Anytime you see a pullback, that's an opportunity. But I do believe the market is going to finish up stronger, probably, 6,600 at the end of the year. And I do going into next year, again, I'm very, very bullish. When you see the Russell do as well as it has done just since April, that's really good indication of what's to come, because that's the lifeblood of America, small business. So going into next year, actually we're seeing the S&P be over 7,500. So we're very, very bullish on the markets and the economy.
All right. That's what we like to hear. The more bullish, the better, of course. Hey, got any questions for Eddie or myself? What do you think GDP is going to be doing? Where are we heading? Precious metals prices going up? Is that the canary in the gold mine? What are your thoughts? Email address kl@kerrylutz.com. And of course, if you want to find Eddie, like we said, egsifinancial.com. And Eddie, we'll talk to you again soon. Thanks.
Great. Thanks, Kerry. I appreciate it.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.